Coin traders, what's going on? Thanks for joining me for another show. We're going to look at Algorand ALGO on that ticker. And I want to start off with talking about a tweet that I made earlier today, and that's if whether or not algo is still heading to 8 cents and lower. So did want to get the community feedback, and there's actually a lot of great comments in this. So if you haven't gone over and checked out this tweet yet, definitely make sure you do that. And also if you haven't dropped a follow for me yet, at coin_trades is the handle. Looking forward to chatting with everyone over on Twitter and having great discussions. But anyway, want to talk about this target and pretty much talk about my take on it, since I did get everyone else's take on it right now. So do want to provide a little bit of analysis for the current Algorand setup that we're looking at right now, especially with the current state of all of the markets right now. So yeah, if that does sound good, I would appreciate hitting the thumbs up, like, and subscribe if you have not done so just yet. And so do want to start off, and we will be jumping into the daily first here because we're actually seeing a little bit of upside as the rest of the crypto space does start to see a little bit of upside here after we did have a little bit earlier of an initial pullback. So as crypto markets were starting to pull back, this typically happens frequently in crypto where we see these pullbacks. It looks like we'll see a little continuation to the downside, but then it's actually a fake out for a sell-off, and then we do get a lot more nice bullish upside. So right now, currently looking at breaking out this high, which come in at 9.63 cents, which is the target that we're looking at to make a new higher high right now. So currently sitting at a high of 9.42, but also just like in this instance a few days ago on the 3rd, saw a quick rally and then a quick sell-off. So hopefully that's not the case this time, and that does confirm a resistance point. So we're actually looking to see a little higher high, pullback, and establishing a support point. So in the short term, it's nice to see a lot of this upside move, especially after what was potentially a sell-off fake out earlier. So if we do take that and extrapolate it actually into the current setup, then what we're looking at is a big resistance point coming in right at the 12-period EMA exponential moving average. First, as you can see, that nice little rally that we talked about, big resistance point that we did see a sell-off. So confirming this exponential moving average as that resistance point. So right now, looking at battling that. So on the current daily candle, looking at 9.54 as being the upside resistance target that the bulls actually need to see this current daily candle break above. So then we would be looking up on top at the 26, as you can see on the most recent nice little multi-day rally. Nice break of the 12-period exponential moving average, but getting stuck up below the 26. So big resistance zone up ahead. We know that's going to be another big resistance point up ahead as well. But one of the things that we're looking at right now is a pretty nice break on the current candle of a big resistance point for the daily. So if we look left, big point of support and big point of support prior to flipping it as big points of resistance. So if the current candle can hold on top of this level, and then we're looking at 9.51 as being that level, then that's going to be able to confirm a little bit more upside. Especially do want to zoom into these candles right here, because this is actually an extremely bullish setup as long as the current candle does hold, because then we would be looking at establishing a much higher level of closing support, which does come in at 9.4. So as you can see, despite breaking it, once we reclaim this level, all of these candles have been able to maintain closing support, and that's why it is so significant that all of these 4 candles have such small bodies, whereas the overall daily price trading range that did close stuck between that 9.4 to 9.5 range. So the fact that now we're starting to get a little bit more of that upside, current candle is going to be in effect, and that is going to be a big important factor, especially after pulling back, setting our low, and then on this quick little pullback today, set a higher low, and now we're looking, like we said, to top out this higher high. Now got the daily volume pulled up because I want to talk about the current volume or lack of volume basically for what we're seeing right now. So basically, like we said, not much volume coming in. So even the candle that did just close, 10 million algo. So, and that's even with this little sell-off and the rebound and buying right here. So as you can see, negating this small bearish candle, which did come in at 8.64 million. And this is all on Coinbase anyway. Negating that, we actually had a little bit of increasing a bullish volume. So the current candle, we're already at 3.765, and we are less than 4 hours into the current daily candle. So reason to believe that on the current candle, we are going to see increasing a bullish volume, so a bigger candle bar. And that's especially true if we do top out this higher high, and we are able to see this candle continue on its upside run, which at this point is starting to seem extremely likely. So do also want to take this time to draw a level of closing support looking at 9.2. So to the downside, since we are starting to see a lot of confirmation of holding 9.4 as closing support, and then now breaking 9.51. That was our big, strong level of closing resistance before and also closing support prior. So because all of these levels are still extremely strong and relevant, the fact that we could see potentially increasing bullish volume is going to be a lot of that confirmation signal that we are going to be looking for in order to actually see a little bit of optimism that bulls are going to be able to hold through and actually start to push prices higher. So on the big sell-off that we saw that did reject from the 26-period exponential moving average, actually saw a little bit of decreasing sellage pressure, and that's actually true too, especially if we look at this bearish candle when we did talk about it coming in at 8.64. So the strong candle comes in at 13.54, followed by decreasing bearish volume at 12.14, pretty much signaling the end and the bottom of this pullback retracement. So it might seem likely and plausible to think that the current candles over the last week or so would be setting up for a bearish flag. Well, the thing about this pattern and setup is that if we actually look at a Fibonacci retracement from this high coming in at about 10.18 down to the low just above the 9-cent level, then we're looking at a retracement over the 50% level on this bounce. So typically when we talk about flags, we're only looking at the 38.2, but most likely the 23.6. So that would actually have seen us looking at less of an upside move than what we actually saw to be that confirmation in that guide. Otherwise, a lot of things are set up to actually have that be a pattern, and it's still not an impossible pattern to end up setting up, especially if we do get confirmation of big rejection pretty much below this 9.8 level, and that could lead to further sell-off, confirming this as a bear flag. So if we actually talk about my tweet, whether or not we're actually going to see it down into the 8-cent level, then right now it's not as apparent, and I do think a lot more bearish things have to come in because especially after setting our low on the most recent pullback that we saw where we actually had a lot of bearish volume, of course it's not impossible to think that we could actually see a little bit more of a selling pressure, which would obviously require a lot more bearish volume. But right now we had opportunities to actually continue that sell-off multiple times, and we didn't see the strength and the follow-through from the bears. And so we know that over the past couple of weeks, we've pretty much just been looking at a decrease and not much volume at all across the trading board. But because we're confirming a lot of downside supports and we haven't been able to see the bears close below some of these big, massive levels, in addition to actually starting to see some nice rally potential to break some of these levels, it's going to be a lot harder for the bears now to actually reclaim a lot of these prior support levels, break through them bearish, and actually continue to push prices lower. Now, one of the reasons that I actually wanted to make a tweet like this as well is just to see the overall sentiment from everyone else. And there has been a lot of negative sentiment that pretty much everyone's in agreement that prices is going to go down into the 8-cent and possibly even lower, with calls down to the 5-cent level. Now, although this isn't necessarily impossible, when we start to see the opinions so focused on one side where everyone's in agreement that prices are going to go lower, this is typically when we actually don't see that happen. And we actually do the opposite of what the consensus typically thinks, and that's when we do start to see a little bit of that rally. And then what happens in that instance is that because everyone's under the belief that prices are going to get pushed back, that when we do start to see a little bit of upside, people start to freak out and actually FOMO in, thinking that we aren't going down and that they're actually going to miss their buying opportunity to get in at the current prices. And that's actually one of the things, kind of like a short squeeze, that actually ends up pushing up the prices so quick and so fast, is there's just a lot of FOMO buying from a lot of negative sentiment when we actually do expect a lot of prices to continue to pull back. So hopefully the point that I'm making here is that the technicals aren't necessarily as bad as the fundamentals, or the consensus, I should say, rather, not the fundamentals, but the consensus is actually making it out to be. And so because of that, I'm always cautious and always weary about the potential for just the next leg of upside, especially when we did have a daily candle closing with such a nice bullish hammer. So now at this time, do want to flip over into the 2-day and pretty much talk about a few things here. Obviously, we already talked about volume, but one of the things that happens and that needs to happen in crypto markets like this is just an overall consolidation that does start to taper off. And when we do talk about long-term bearish markets that need to require a sentiment shift and change, we don't typically see the normal V-shaped bounces like we typically see because it's not worried about what the price level that's going to be. We actually have to have a long enough time to establish an accumulation range where price starts to establish and normalize in an overall longer-term trading zone that does allow the sentiment to shift and actually provide that longer stable opportunity for a mindset to shift, which creates a little bit more of that longer-term growth like we're seeking in normal bull cycles. So I'm not expecting at all any type of sell-off and V-shaped bounce and recovery to signal and kickstart a normal bull cycle. I do think it's going to come down. And if we actually look at an auto scale here, we can see that how much we've actually started to see an inverse parabolic move where we actually are starting to see a lot more stabilization and tapering down as we do approach what right now we looked at on the shorter time frames as being about the 920 to 940 support line. And so the longer we actually stabilize above that, it does make it less likely that with any sort of significant bounce first, we're not going to see a retracement coming down below this level, because normally we're starting to form, for example, like a longer term cup and handle type pattern. And the reason those patterns start to change is just because we do have those sell-offs, then ultimately we do start to have an accumulation phase, prices do normalize, and then that's when slow, steady growth starts again. And once we can start to visually see the growth, that's when it really starts to taper off and we do get a lot of those FOMO type moves. So realistically, I would not actually be surprised if we're looking at a bottom here and we don't end up hitting the longer term downside calls that a lot of people are looking at, such as down to the 5-cent level, or even like the 7.5 cent like we've talked about as being a technical target on this channel. So now looking at this 2-day chart, and if we do go ahead and zoom in here, a lot of stuff to talk about because very strong upside resistance for a close on this 2-day chart coming in at 975. So that is going to be our next upside target with regard to this 2-day chart. And it is going to start to align with this 12-period exponential moving average, which does come in right now at 979. On the current setup, though, despite a big sell-off candle, we're actually looking pretty nice with a nice green, red, green, and an also a bullish engulfing setup here, since we do have a nice small spinning top bearish candle. And like we said, still have about a day left until this 2-day candle closes, so a lot could happen, and we could see a rejection and sell-off, for example. But like we looked at in the daily, as long as volume can still stay high, then we should still see the prices be able to maintain or actually continue to push higher up towards this 9.76 resistance point. All the same downside targets now are still in effect from 9.2, 9.4, and then 9.51. And then if bulls can actually flip and see a 2-day close on top of 9.75, that's going to turn this into extremely nice support, which then hopefully we would be able to see a little bit more follow and upside, which should shoot the price on the 2-day chart in between this 12 and 26 period zone, which if we do look overhead should actually put the price in between the 10.5 cent level, which realistically is probably going to be a pretty big resistance zone since it was a very, very big point of support for the start of the summer. Ultimately, though, I would be pretty confident that if we can break above this 9.75, maintain that level as a support for the close, then we would be able to actually see the bulls rally up, testing this 10.5 cent level, and then probably making short work of it again and reclaiming it as we do start to test this zone in between the 50 period EMA and the 26, like we actually haven't had on this 2-day chart. Basically, since back in March when we did get the release of Algo Kit and a lot of that bullish news that followed. So next thing I want to look at is on the 2-day chart, pulling up the RSI Relative Strength Index, just how we have an extremely oversold 2-day, which did bottom out on the 10th of June. And then also now we are starting to see higher lows on this move. So a little bit of that bullish divergence in that instance. So if we actually look at that, the 10th of June was our low point, and we actually set a new lower low since then, but mostly maintaining a lower close since then, which does form a lot of that bearish divergence since we were looking at a higher low on the RSI. So we know that a lot of the strength is starting to favor a little bit more upside, and that's one of the reasons too why we're actually looking at this price level as being a little bit more of that stabilized bottom, and kind of one of the reasons why it's not as likely right now, in my opinion anyway, and based on the analysis, that I don't really see a lot of these lower targets down to 5 cents coming in unless something drastically starts to happen. But I do actually anticipate a little bit more upside, which as we do start to get upside does make it a lot more increasingly difficult for price to actually rally over and start to see a little bit more of those downside targets like down in the 5 cent level. So although it could be possible to return down into the 8 cent levels once again, so we're looking at our low right now at 873. So we could still potentially see that, especially if these exponential moving averages hold. But like I said, more realistically, it is starting to look like we're starting to form a longer term rounded bottom, which does start to mean that we are confirming a longer stabilized point of support. So now last thing that I want to do before we go ahead and wrap up is actually look at the Bollinger Bands, and we are looking at the 4-day chart right now. So on the longer scale, but essentially what I want to do is that if we look at the amount of space that was actually formed on the overall pullback, you can see there was a decent gap. And essentially, if you're not familiar with Bollinger Bands, this is a standard deviation above and below a moving average. So if we turn off the rest of the exponential moving averages, for example, we can see where our moving average is on this Bollinger Band. So this orange line is our moving average, and we do have typically, say, 5% upside, 5% downside. That's obviously not the case since we didn't measure it, but we do have the same percent upside as we do percent downside, and that's how we do get these formations. And typically, once they do start to get tighter and tighter, that's when we know that a lot of volatility is coming, which is exactly what we're starting to look at right now when we look at this 4-hour chart. So now on this day, you can see how the price just pretty much rode all the way to the bottom, this lower Bollinger Band, until we actually had a little bit of a bounce, rejection off this exponential moving average, and then returning off of the lower level of this Bollinger Band as well. So now after we typically have kicked off, we're looking at a little bit more of that upside pressure and target. And so if we look at the moving average right now, 10.91 is where it comes in on the current 4-day candle. But if we actually zoom out, then you can see just how tight overall these Bollinger Bands upper and lower, levels actually are right now. So we do know that the price is starting to get squeezed, and we are going to start to see a big breakout, because typically this does signal a little bit more increased volatility, which is exactly what we are going to be expecting here. And since we aren't expecting any downside volatility, that does start to increase the likelihood of that upside volatility. But obviously definitely can't rely on those indicators alone. But that's just another thing in our overall analysis tool bag that we do have to be mindful of and looking at. So yeah, personally, overall, regards to the tweet I made and the 8-cent target, I don't think 8 cent itself will actually hit. We might see a potential dip down into the 8-cent range, but that's also if we don't actually see a little bit more continued upside. I would be surprised actually if we actually do pull back besides that, but we are expecting a little bit more bullish upside and rally. But of course, especially on this chart, are going to have a lot of resistances to the upside right at that 1050 level, which also is going to correspond with the 12-period exponential moving average, which has been a big resistance for us so far. Once that happens, though, then the 12-period is also going to be, or the 26 rather, is going to be a big point of resistance as well, which also should correlate to the upside resistance point on this 4-day right around the 12-cent level. So again, these are going to create great opportunities for longer-term accumulation as well. Then once that does start to stabilize and we do start to break through those levels, that's where we're really going to start to see a lot of upside movement really start to step up and actually really take off, pushing the prices up even higher. As always, not financial advice, and would love to know everyone's thoughts, opinions, issues, disagreements, all that stuff down below in the comments section. But otherwise, that actually is going to go ahead and wrap us up for the show today. Hope everyone enjoyed. If you did, please hit that thumbs up, like, and subscribe button. And also let me know down in the comment sections whether you think algo is going back down into the 8-cent level, or we are going to start to see higher price action from here. That is going to wrap it up for now, though. So thank you all for joining me once again, and hit that thumbs up, like, and subscribe if you have not done so just yet. Do appreciate all the continued love and support. As always, does mean so much. Stay safe, take care, everyone, and I'll catch you back in the next video.